This year, the Co-operative Bank is making youth empowerment a priority. We're here to help Kenyan youth, whether in college, employment, business, or agriculture, realize your dreams by providing the tools and knowledge you need to grow your incomes. This will be through youth forums, a series of free weekly online webinars on Zoom and other social media platforms. We've already covered some exciting topics with more to come, including better financial planning, budgeting, investing, taxation, and more. This week, we're pleased to have Stella Swake, Senior Research Analyst, Kingdom Securities, to talk about how to invest in the Nairobi Stock Exchange. Karibuni. Karibuni.
Thank you very much, Emmanuel, for the wonderful introduction. And as rightfully put, my name is Stella Swake, the Senior Research Analyst at Kingdom Securities. And today we are going to talk about how to buy shares, the basics of it, what not to do, what to do, and how to go about it in general. I am excited to be your captain of the day, and I hope you too are excited to have this topic. Let's hit it running. To start us off, I'd love to first highlight the key things that we are going to discuss and highlight some of the terminologies that we are going to use so that you're able to understand what we are talking about and not be left behind when I mention a few words that might sound a bit formal or jargon. So the first of the words or the terms is financial instrument. So I will keep reiterating or referencing the term financial instrument to mean a money product or a tool that is used for investment or to borrow money. The second term will be headroom, and just from the word, it basically translates or refers to the space that you have before reaching your limit or the space that you have before you make your money, the money that you want. The other one is interest, and I'm sure you've heard of it a couple of times. When you're borrowing money, when you're getting paid something for something or some money that you lent to your friend or you have been lent by the bank. The other term is issue, and this refers to when a company or a government puts out new shares or bonds. So when I say something like the government issued a bond, I mean something or a financial instrument that the government used to borrow money. The other term will be a brokerage firm, and this is basically an intermediary. Remember, when I introduced myself, I mentioned Kingdom Securities Limited. This is one of the intermediaries or a brokerage firm that will match you or plays as an intermediary between a buyer and a seller. So it is part of a market. The final term is listed. I will also refer or reference this word a couple of times just to mean that a company is officially allowed to sell its shares on the stock exchange, the Nairobi Securities Exchange. And that said, I will dig deeper into another term or another system that is in the stock market when you're buying shares, and this is the marketplace that we mostly refer to as the capital markets. So what are capital markets? These are places where people buy and sell financial instruments. Remember how we defined financial instruments? The tools that you use either to invest or to borrow or lend money. So where you do this, because you have to do it in a particular platform, that is what we are calling a capital market. So think of it like a Gikomba or Wakulima market, where you get to buy products, financial products, and not the tangible products that we are used to. Because when you go to Gikomba market, you will find a cloth, and that is a tangible and something that you can see. So in the financial market, the capital markets, we buy financial instruments which are not tangible or you cannot see them, but you get money out of them. And what exactly do you buy? You buy shares or you buy bonds. But remember, today we are going to focus on shares alone so that we do not overload you with a lot of information on investing in the capital markets. And up to there, I hope we are together and you're following keenly. And just to engage you, to make sure that we are cruising nicely, I'd want to engage you and ask you a question on what worries you most about investing. Is it losing your money? Is it lack of information? Or is it the issue of trust? So put your answers on the chat box and we will look at them earlier. And also you will gauge yourself and after the conversation or the discussion and tell us whether this has been solved for you or you would wish to get more information. On the issue of trust, based on the question that we have engaged before, is your money safe at the capital markets? Remember, every economy has a capital market of its own. You go to Uganda, there's that system or the marketplace, their capital markets. You go to Tanzania, you go to the developed nations or developed economies like the US, you will always find a capital market. In Kenya, we have the Capital Markets Authority. And this is the arm of government that regulates the capital markets or the financial markets. It protects the investors and ensures that your money is safe such that you're not defrauded or companies do not misuse your money. So that said, at the capital markets, you're able to trust the markets, but you have to note that the capital markets does not regulate or control price movements. It does not control where prices go, whether up or whether down. At the capital markets also, we have categories of markets. We have the primary market and we have the secondary market. So I am sure most of us have heard about the Kenya Pipeline Company, IPO, KPC IPO, and I will use this example to highlight or illustrate what a primary market is. So at the primary market, money goes directly to the issuer. Remember we defined the term issue, so you realize that the issuer can be a company or the government. So in the primary market, the money that is raised goes directly to the issuer, in this case either the government or the company that is issuing shares. So new shares or bonds are sold in this particular market. For example now, KPC is going into the market in a privatization transaction. So by privatization, I mean the government is selling part of its stake to the private sector. So it stops being a government-owned company fully and is partly owned by the private, and hence the term privatization. So once the shares are sold to the private sector, then these shares are listed at the Nairobi Securities Exchange, and therefore, once they are listed here, you and I can trade in the shares. I can buy from you, you can buy from someone else, and now that happens in the secondary market, and it takes us to the definition of a secondary market. So a secondary market is where shares are bought and sold by investors among themselves. So I sell to you, you sell to me, or I buy from you, you buy from someone else, and the money rotates around the investment space. So this includes something like me going to the market today and buying Safaricom shares, or you going to the market and buying CIC shares. So again, I want to engage you, and as we take 5, I want you to tell me, what do you think happens to your money when you invest it? And I'll refer to one of my friends who was telling me this morning about their experience with shares. So experiences can be different, but you really need to have information before you start investing in any product in this market. So this friend of mine was making a joke and saying that we told him to buy, or someone told him to buy a particular stock, and it went down or it tanked. So I just asked him outrightly, what is your experience with trading shares? And the guy told me, ni mbaya man. But then I tried to explain to him on what may have went wrong, and he did acknowledge that for some reason he just went into the stock market without the required information or the knowledge on how he was not guided. That was the answer. And so we are here today to ensure that you are guided and that you know what to do when you're investing in the stock market, in shares, different stocks at the Nairobi Securities Exchange, because there are many existing shares. And that takes us to the platform, the Nairobi Securities Exchange that we keep referring to. So this is the platform that allows the trading of shares or stocks, and it's basically the secondary market of our country and many other economies in different countries. So Kenya Stock Exchange market is called the Nairobi Securities Exchange, the one that we keep referencing or referring to, and it will connect you, the buyer, to the seller. So the Nairobi Securities Exchange also has its own regulations to ensure that markets are not manipulated, to ensure that your money is safe, and to ensure that investors are not defrauded. It also ensures that there's transparency and disclosures so that the investor knows everything beforehand before they invest in a particular stock. So this is the company or the platform that will allow or will distribute information on earnings. For example, when companies release their results, they will distribute the earnings releases and tell you, this company has made this amount of money, these are the profits, these are the expenses, and such things. It will also tell you when companies issue profit warnings, and profit warnings are documents or statements that companies issue and say, we are going to make losses for this particular period of time because of 1, 2, 3, or 4 things. And that said, in a nutshell, what distinguishes the platform, that is the Nairobi Securities Exchange, and the market is that the NSE is the marketplace, while capital markets are the wider system. So think of it this way. You have a mall, let's talk of a mall that you know, let's say Southfield Mall, and there is a shop in there. So Southfield Mall is the capital market, while a watch or a grocery shop within the mall is the Nairobi Securities Exchange. So why does the Nairobi Securities Market or Exchange matter? It matters because it's one that offers a couple of benefits or a couple of transparency and disclosures for investors. And one of them is capital formation. So by capital formation, I mean that when a company lists, for example now, how KPC is going to list at the Nairobi Securities Exchange, there is some capital that will be raised for the government. If a company also comes to the market to list its shares, they also get capital to fund whatever they want, whether it's expansion, buying of new equipment, or expanding their business to other countries. It's all capital formation. They raise capital through the Nairobi Securities Exchange. The other benefit is that it offers liquidity, such that if I want to go to the Nairobi Securities Exchange to sell my shares, I am able to get a buyer. If someone wants to buy shares, they are able to go to the market and get shares to buy. Also, it provides or helps with price discovery. By price discovery, we mean that it ensures fair price through supply and demand. Remember, the basic or let me call them the basic forces or rules of supply and demand is that when there is more supply, prices of goods drop. When there is more demand, the prices of goods and products go up. So it's the same analogy or the same case for the stock market. When there is more demand for shares, then the price goes up. But when there is supply, there is more or there are more people selling their shares at the Nairobi Securities Exchange, then we have prices going down. The other thing that the Nairobi Securities Exchange helps, or this platform helps, is that it ensures corporate governance. By corporate governance, we mean that it promotes transparency and confidence in the market, such that when you're buying or selling or participating generally in the Nairobi Securities Exchange, you're able to know what you're doing because you have the information beforehand. You don't invest into a company blindly, not knowing how it performs financially, whether it makes profits, whether it makes losses, whether it has plans to expand. You are not going in blindly. You have information that has been facilitated and ensured by the Nairobi Securities Exchange. Finally, it allows global integration. So someone at US or in US is able to buy shares in Kenya. And someone in Kenya can also buy shares in other countries because of the facilitation of the exchanges in these different countries. So it allows us to integrate with other countries and with other investors. Again, engage me, please. When you think of shares, what comes to your mind? For a long time, the people that I have interacted with mostly think of suits or the big screens that you see behind people with a lot of numbers. And also, they think of rich people. They say, Mimi, sina pesa. But you see, the challenge is, or the irony is, you guys will go for a night out on a Friday, buy your uji. Your uji will cost something in the lines of 3,000, let's say, per person on a Friday night, on a minimal Friday night. On a Saturday, maybe you will go for another road trip and it will cost you maybe another 5,000. So when you think of it like that, the youth use a lot of money on things like uji, things like road trips, which are not bad. But if you think of it from an investment perspective, you are not rich, but this is money that you can put in somewhere once in a while with discipline and with patience. This is money that you can set aside and buy a couple of shares. Remember also, at the Nairobi Securities Exchange, you can even buy one share. This is a very good regulation that came in last year, and it was mainly for the retail investors, the young people who are coming into the employment market, the students who are in universities and can spare a few shillings. So it is possible to buy even one share at the Nairobi Securities Exchange. There are shares that cost 9 shillings, there are shares that cost 5 shillings, there are shares that cost 400 shillings. So there is an option, a variety of options for you to choose from at the Nairobi Securities Exchange. So I would want to demystify that myth that you should be rich or only the rich people invest in the stock market. Anyways, let me know what you think of shares when you hear people talking about that particular space. And now I want to dig a bit deeper and explain a few concepts when it comes to shares trading. And one of them is, what are shares really? We've been throwing this name now and then, stocks, shares, but what are they really? In basic terms or in lay terms, shares is a part of a company. So if a company has, let's say, 100,000 shares and you buy 10,000 shares, you have bought a piece of the company. So there is some form of ownership. You own shares in a company, and it's only the rights when it comes to voting and board membership that differ, but that is a conversation for another day. Today we are basically talking about how you invest in shares. So it's buying a part of a company. You own a part of a company when you buy one of its shares, 2 of its shares, or 10,000 of its shares. Another thing that I would want to highlight is that when you buy a share, if the company grows, also the money or the value of your money grows, the money that you invested. So how this happens is the share price reflects mostly how a company is doing. So you find that a company is doing very well in terms of profitability, it's doing well in terms of expanding its revenue streams. So when it does this, this also reflects in the share price. You see the share price growing or increasing when there's positivity around a company. Also, one thing that I would also want you to notice that the economic environment also determines how the companies within that economy perform. So if the economic conditions are stable, we have low inflation, people have money, so there is spending, and you're using money, then the economy also, or the companies in that economy also reflect that. Something else that happens when you have shares is dividend payment. So a dividend is a part of profits that a company shares with its shareholders. So different companies have different dividend policies. So a company may say, from all the profits that we make, 80% will be given back to our shareholders. Others may say 30% will be given to our shareholders. So there are companies that don't pay dividends because they are still growing, so they use this money to expand, to grow their business, but there are companies that consistently pay dividends. So that part of dividends is also another way that people make money at the stock market. Examples of shares, I have mentioned a couple. I have spoken of Safaricom in the telecommunication sector. I have also, let me mention cooperative bank in the banking sector. We have the likes of CIC in the insurance sector. We have the likes of EABL in the manufacturing sector, the company behind your Uji on every Saturday or every weekend. So we have a couple of companies or sectors that you can play around at the Nairobi Securities Exchange. What I'm saying is there's variety, there's options. And who is good for shares, or who fits the buying of shares at this market? So mostly we say that stocks are more riskier than the other instruments like government bonds, because for government bonds, they are guaranteed by the government, and at the end of the period of investment, you get your principal back. As for shares, we say that they are more risky, but they have higher return. So who is fit for this particular asset class? The younger people who are our audience for today, you and I, are fit for investment in the stock market because you have, or we have flexibility, the luxury of waiting for companies to turn around. What I mean by this is that if a company is not doing well right now and you have bought shares in that company, then you have the luxury of waiting for this company to grow itself, to make more money, to become profitability, as compared to someone who is 70 years and is maybe using or depending on their pension for their day-to-day lives. So this person may not have the flexibility to put in their money and buy shares because they don't have the time to wait, they don't have maybe the energy to work and sustain themselves with another source of income, and this may be their only source of income. So you and I are fit for this asset class, and that's why we are coming to you and telling you that your investment journey can start today if you're interested in investing in shares. So how do you buy shares, or what do you consider when you're buying shares? You consider something that we call the stock price. So this is the price at which you buy the shares. So if Safaricom shares today go for 30 shillings, then that is the stock price. And prices move daily at the Nairobi Securities Exchange, depending on the demand and the supply of these stocks. So how people make money is that you bought a share, for example, at 14 shillings, and this share grows to 20 shillings, then you make that 60 shillings. It's called price appreciation or capital gains. Same way, you'd go and buy a piece of land for, let's say, 1 million, and in a couple of years, 2 or 3 years, the price appreciates to 1.5 million. It's the same analogy, it's the same way that stocks work. So you make money when prices move from this point to the other point. So prices are mostly determined by supply and demand forces. I had mentioned this before, and I will use the example or the analogy of maize because we may relate with this. We come from a country that is highly dependent on the agricultural sector. So during drought, we find that prices of maize, for example, will go up because the supply is lower compared to periods of good weather when we have rains and we have more harvest, and now there is more supply. So when there is more supply, the price will go down because there is a lot of this particular product in the market. So today, if we go to the market and many people are trying to sell Safaricom shares, then we will see the price go down or decline because there is supply. But if you go to the same market and more people have or want to buy, we have a more demand for the share, then the price is likely to go up. Also, I love to explain or elaborate how demand is shaped or what catalyzes demand for a particular stock. I may have mentioned something to do with dividends. So if a company pays dividends and actually increases the amount of dividend that they pay, for example, they paid 4 shillings last year and this year they say we are going to pay 5 shillings, then this will catalyze demand because people want to buy into this share and get that dividend. So that increases demand and makes the price go up. Something that would catalyze a decline in share price would be more people wanting to sell, and this may be brought about by, remember I mentioned something like a profit warning, a company sending out a document and saying we think we are going to make, or we have analyzed our books and we think we are going to make losses for this particular period. So that is one thing that could cause a decline in the share price because people rush to go and sell that share. Something else would be the actual loss. So if a company announces results and finds that they have made losses, this may catalyze a want to sell, and this may decline or push down the price of that company. So how do you make money in the stock market? I want to show you or to illustrate how a company has moved, the share price of a company has moved, so that you see how you would have made money. So here we have Co-operative Bank stock price. At the beginning of at the beginning of January 2022, the stock price was at 12.95 shillings. As of yesterday, the price was at 28.65 shillings. So basically, this price has more than doubled between those 3 years. And I will give you one tip as we finish or conclude the conversation on why you need patience at the stock market. And this completely illustrates why you need it. So most of the time we say that stocks are long-term, and we say they are long-term because companies take time to grow. They take time to expand, to strategize, re-strategize, and they do this when the economy also is absorbing shocks. So you can remember the issue of COVID-19. We have had different crises as a country based on a global perspective. So these companies operate under these particular conditions and still manage to grow and manage to make profit. So that's a good illustration. You can see the chart on your screen on how the price has moved consistently from 12.95 to 28.65 shillings. So on the side, I have a table that illustrates again the price movement. At the beginning of 2024, the stock price was at 11.35 shillings. At the end of 2024, it was at 16.45 shillings. So again, if someone bought that share at the beginning of January and sold at the end of December, they would have made a profit. Within the same year, the company announced a final dividend of 1.5 shillings. So if you had 200 shares, that is the table that is below there, you should have gotten 3,290 at the start of January. and you had invested 2,270. You can see the margins, and this is money that you can be building up your portfolio at slowly by slowly. At the beginning of 2025, if you had waited to buy a share at the beginning of 2025 and buy 200 shares, you would have spent 3,490. At the beginning of January, if you wanted to sell, you would have sold at 4,790 shillings. As of yesterday, you would have sold your shares at 5,560 shillings. So just looking at the table, if you had bought your shares at the beginning of January, you would have spent 2,270. For the 2 years between January 2024 and January 2026, you will have more than doubled that amount. So just replicate this with a higher amount of money, because again, the higher you invest, the higher the amount. So that is a good illustration of how you make money, or how your money can grow in the stock market. So all those stories and all of that information that we have given you, how then do you start your journey, or what do you need to start investing in shares? The process is very simple. In a digitized world, globalized world, we have digitized things. Technology is good, and every time I say that, I remember that phrase of technology. So technology has made things very easy for us as the youth and as the people who are tech savvy. So what you need is a CDS account. So this is the account that will hold your portfolio. This is the account that will facilitate you buying and you selling your shares. It's opened for you by a brokerage firm or an intermediary. Remember the definition of an intermediary? The person that matches you, the buyer and the seller. So this is the company or the institution that also facilitates the opening of a CDS account. Remember, Kingdom Securities, as I said when I was starting, is an intermediary. So such a company can help you open a CDS account and start your investment journey. So when opening a CDS account, you will be required to also provide a couple of documents just to confirm that you are not, or you are human, and to verify your identity. You will be needed to provide an ID, you will be needed to provide a passport photo and a bank statement, just the top bit on the owner of the bank account, its name, and the bank account number. And then the last thing that you need is some patience and discipline. Remember the last chart that I showed you on how the price moved from 12 to 28? So also imagine someone bought that particular share at 11.35 at the beginning of 2024. Some little patience between 2024 and the beginning of 2026, you have good money. You have more than doubled the amount that you invested. Just a little patience and some discipline to continue building up your portfolio. For instance, you can set aside some 2,000 shillings at the end of every month. When you get your salary, if you're in school, when you get your pocket money and you have something little to save, you can have the discipline of saying, for example, I will be buying shares worth 500 shillings every month. So that's the discipline I'm talking about, to slowly build your portfolio. So how can you open this CDS account that I have been talking about? So again, I said technology. You go to the Kingdom Securities Limited website. There is a link there. You can see it on the landing page. You'll just see open a CDS account. So you press the link and it will take you to another page where you will just fill in your information, your email address, your phone number, and then now you follow through with the prompts, and it's a very simple process. It's information that you have, so you just follow through the steps, and once you complete, you apply and you get a CDS account number. So this number is what you will be using to trade, but also things have been made even easier. We have a trading app called KSL Trader app, and this is an app that you can actually trade on your own. You can go to the app, sign up, just input your CDS account number, buy shares, sell shares. It's very easy and very seamless. And things again have been made easier for us. Now I want to do a recap on what we've been learning, just to ensure that you go with something home from this training. And one of them is capital markets versus the Nairobi Securities Exchange, that is the NSE. So as I used the analogy of a mall, NSE is the shop, a watches shop or a jewelry shop that you will find in a mall, while the capital markets is the whole mall or the whole building. While shares is a piece of a company, a shareholder, this is people like you and me, someone who has invested in a company or bought shares of a certain company. So ukisikia shareholders wakimenshoniwa mahali, you are one of the shareholders. And then we have dividends, and this is the money that a company shares with its shareholders from its profits. And finally, capital appreciation is when the price of a stock or a product rises from what you purchased that product at. And that said, I will want to give you a couple of tips to just always remember as you invest your money or as you participate in the stock market. And one of them is start early. As we always say, mapema ndio best. You start now, na kama si sasa ni sasa hivi. When you start now when you're younger, you have the leeway to actually wait and be patient with your investments or with your portfolio. And also, the discipline that I talked about. You need the discipline to set aside your money and invest. We all know that investment it's usually a tough journey, but when you have the discipline to actually do it, it becomes easier for you. You set aside, you can set a standing order, for example, if you're employed, to always go to your broker and tell them, I have set a standing order of 1,000 shillings, buy me these shares, buy me these shares, buy me this stock, blah, 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 blah. So the other thing is that you should avoid rumors and quick money promises. So everything that is of value actually takes time. And I love to reiterate a quote that I love, or a line that says, if you do not understand where the return of a particular product is coming from, then you are the return. So if someone is explaining to you something and telling you that this investment, we are going to get money tomorrow, we are going to double this amount of money tomorrow, you should ask yourself, what is this that is making this money grow? So some of the things that usually work that way ni mambo ya laundry, wash, you know those things. So you should always ask yourself and try and understand where the return is coming from, because if you do not understand, you are the return and you will be scammed. Lastly, think like a business owner, not a gambler. So this is just to reiterate and to sensitize the other point that when you plant a tree today, you do not expect to bear or eat the fruits tomorrow. You have to put in some patience and wait for companies to turn around, for things to be good. You have to actually wait. And finally, always ask questions and keep learning. If you don't understand something, just ask. Remember, information is power, and you're better off with information. When you know something and understand something, then you're able to actually put across questions or even invest better and become a sophisticated investor. So thank you very much for paying attention. Thank you for being good students, and I am very happy to help and answer all the questions that you have. All right, thank you very much. I see Lily is asking, I worry about making wrong decisions. So yes, we understand your worry, and it's totally fine and justifiable, but worry is always mitigated by getting information. Wrong decisions, on one hand, are a learning curve, because the investment journey is a learning curve. You learn every day, you make decisions every day, and when you interact and get more information on these things, then you're able to learn and be better every day. Remember, practice makes perfect. And one thing also that I did not mention is that the beauty of the stock market is that it goes up and down. It's a cycle. So at the end of the day, if you have invested or you took your chance, your time to learn and understand why you're investing and what stock you're investing in, then one day it will still go up. So you do not lose your money completely, or you don't even lose money. You realize the loss if you sell the stock. What I'm saying, Marvin is asking, lack of trust too, and the fear of losing money because of limited information. Yeah, and I believe this is the question I asked about what you fear most when you hear about investments. And I hope you get more information. You are eager to learn, curious to learn, and curious to ask information, because information nowadays is so vast. We have AI tools. You can also verify this information through experts and certified financial advisors. We have different brokers and different research houses that issue and give free advice or free information about the market. For example, Kingdom Securities Limited has its channel that it shares a lot of information on how the economy is doing, shares information on how markets are performing, what we expect of the market. So read widely and be curious about how the market performs. So yeah, the other one, I worry about making wrong decisions. Totally understood. The investment is to gain interest as the company uses it to fund their projects. Yeah, I believe that one was an answer to someone else. Someone is asking, you have talked, I have lost the question again. Can you buy shares with online brokers who provide crypto? Today we were talking about shares. Maybe that is a conversation that we will be talking about in a different setup. Someone else is asking, any suggestions on stocks to purchase? Again, I mentioned that we have channels that we share this kind of information and even talk about the recommendations and why we recommend that, our view and the view on the economy at large. Someone else is asking, will I be charged to open a CDS account? No, you will not be charged to open a CDS account. The only charges that are there when you're trading shares are the commissions that go to the CDS, to the brokers, and to the other organizations or the intermediaries in between. So the percentage is around 2.1%, the total costs, including all the costs for all the intermediaries. Yeah, someone else is asking the same question on good companies to buy. Please refer to the recommendations that we have given because they are extensively researched. Yes, someone else is asking, how can you transfer shares to another person? You cannot transfer shares to another person without them buying the shares from you. If you're talking about maybe someone sharing or transferring shares from maybe a deceased, that is a different conversation, and there's a process for that is called immobilization or transmission. There's a possibility, there's scope here. So if you have such a scenario, such a case, please reach out to us at info@kingdomsecurities.co.ke. How do dividends actually work and when do I get them? So that's a very good question. And dividends work in this way. Companies are not obligated to issue dividends. It's specifically at their discretion, considering what they are trying to do as a company. They are not required by law or anything. So if a company has a dividend policy and they usually share 80%, for example, of their profits with their shareholders, they will do that when they make profits. But there are companies that still make profits and don't issue dividends because of different reasons. Maybe they are expanding and they have use for the money. But that is how dividends work. How do you get paid? You get paid if you own the shares at the time they were declared. So for example, if I buy Safaricom shares today and they issue dividends and they say, we have declared a 4 shillings dividend and the book closure is on 13th February. What they mean is, if you will have these shares, you will have bought Safaricom shares by 13th February, or anyone who had bought prior and still has the shares on 13th February, they will get the dividends. But if you buy, let's say, on 14th February or 16th February, you will not get this dividend. The dividend is paid to the account number that you indicated when you are opening the CDS account, or the phone number. So it's either through a bank account or the M-Pesa number that you indicate. And you have to indicate it well, because we cannot, or the money cannot be sent to your M-Pesa if you indicated a bank account. It's specifically sent to the account or the method of payment that you indicated. What mistakes should beginners like me avoid when investing? I talked of that when I was speaking about the helpful tips, including avoiding rumors and quick money promises. So be patient. Don't listen too much to non-expert advice. Make sure also that you understand, try and understand. I know financial terms could be a bit, a lot of jargon on it, but try and understand how a company that you have invested in works. What is the strategy? For example, if you're investing in Cooperative Bank, what is the main business of this bank? What is the strategy? Don't listen too much to rumors out there of, no, that is not a good company, without particular reasons being given. So that is one of the things that I like to advise a lot. Can one have several CDSC accounts, and do the accounts expire? They don't expire, they become inactive. And yes, you can have different accounts by different brokers or intermediaries. You can have one with Kingdom Securities Limited. You can have another one with another intermediary. So yes, you can have a couple. The other one is, how come there are high fees when one requires to withdraw money from the CDS and there is no option for M-Pesa? There is an option for M-Pesa. The charges differ depending on the type of method you indicated. There's RTGS, there is EFT, there's M-Pesa. So there is an option for M-Pesa. If you find the charges for one particular method are higher, you can switch to another one. Yes, there's an option of M-Pesa. Another question by Beatrice, who is asking, how will you know the best shares to buy? You know the best shares to buy based on how the company is doing and the time of the market. We have cycles. Remember I talked about we go up and down, up and down. There's a time when stock prices are very low. There are times when stock prices are very high. Like right now, prices are very high at the stock market. Either way, the fundamentals of a company, or the technicalities, including how the share price has moved, will inform you how to buy or what to buy. So what I'm saying is, you have used a broker to open your CDS account. So this broker or intermediary will help you to know which shares to buy. You engage them. For example, if you have chosen Kingdom Securities as your intermediary, then they have the obligation to recommend and guide you on what shares to sell. So always ask. Remember, I mentioned one of the tips, you have to be curious, willing to learn, and always ask questions for you to understand or for you to make better decisions. I forgot my CDS account. How can I get it? If you're sure of your broker, just write them an email or call them. Just with your ID number, your CDS account can be retrieved. The other question is from Miriam, and she's asking, how can I reactivate my CDS account again? Contact your intermediary or your broker, and they will do that for you. The other question is from Nixon, and he's asking, I've tried opening a CDS account with AIB and several days have passed with no response even after emailing them. What can the issue be, and can I try opening it with another broker? Yes, you can try opening it with another broker, but yeah, you can always contact them. The other question is from Lucy. Lucy is asking, can political activities affect the marketplace? I heard someone saying they'll wait until 2027 elections to buy their shares. I am confused. That's an interesting question. Remember, I said the economic conditions or the economic space also affect how companies perform. So yes, there are cycles, and in theory, it's expected that when the economy is uncertain, when indicators are uncertain, then business goes low. And this is the same analogy. If you're doing business and you expect that there will be some uncertainty at that particular period of time, you will not want to take your capital and add stock. You will want to wait, and once things have calmed down, you bring in your stock, your inventory, and you continue with business. So same case even for stocks. There's some form of calm that comes, or stagnation per se, like people wait to see how things turn out. So that's probably the analogy that the person you had was trying to say. But yes, cycles, politics, and different cycles in an economy affect the market. Moses is asking, I have a CDS account, but I wanted to also have KSL as part of my stockbroker apart from the other stockbrokers. However, I wasn't able to log into the app. Kindly help. If you do not have a CDS account with KSL, you may not be able to sign up because the broker is the one who gives you the CDS number. So when I said that you can have multiple CDS numbers, it's because when you go to a different broker, they will open a different account for you. So you will have a different number for that. So if you have not opened an account with KSL, then you may not be able to sign up on the KSL app. So go to the website, the Kingdom Securities Limited website, and then sign up or apply for the CDS number. Once you get the CDS number, you will be able to sign up on the KSL Trader app. Boniface is asking, do I need to visit the Nairobi stock market physically, or I can buy online through my phone? You can buy online through your phone. You actually don't go to the Nairobi Securities Exchange when you want to buy. You go to your broker. So Nairobi Securities Exchange, as I explained, is the platform, but the broker is the intermediary that now matches you or connects you to the market, yes. So you should not, or you're not required to go to the Nairobi Securities Exchange physically. And he is asking, what happened to Mumia's sugar shares? Shall we ever recover from the bottomless pit? How would we have avoided such purchase? Again, information. Information is very necessary, because the same way the stock market has good returns is the same way that it can drop. Remember the cycles that I'm talking about? So the market can go down and the market can go up. That's why we say that equities or stocks are more risky than the other class of investments. So information and research first is very important for you to understand a business. You follow through, because research involves looking at the financial statements, seeing what they are doing, how they are doing. But if you do not have that capability in terms of the expertise, your broker is very relevant in that particular setup. You need to consult them and ask them, is this something that you would recommend us to buy? Why? Please try and understand why someone or why an expert is telling you buy these or sell these. It's very important to have information. The other question is from The other one is from Ruben. Ruben Gichana is asking, what is PE ratio, price per book value? How do you value a company? So this is a whole class valuation of a company. A lot goes into valuation. PE simply means price to earnings ratio. So the price per share, for example, Cooperative Bank at 28.35 shillings, while the earnings is the earnings per share. Earnings per share simply mean the profit after tax divided by the total number of shares, so that you get the earning per share. So price to earnings is that ratio that shows how the price relates to the earnings per share. Book value, price per book value is kind of the same analogy or the same thing, but not the same ratio. Someone is asking, Andrew is asking, is Co-op Bank listed in NSE? If yes, how much is per share? Yes, Cooperative Bank is listed at the Nairobi Securities Exchange, has been listed for over a decade, and it's at 28 shillings thereabout right now. Someone else is asking, let me get that question well. Someone else is asking, that is Marie Minor or Mary, after how long do companies pay dividends, and can I sell my shares after receiving dividends? Yes, you can sell your shares after receiving dividends. There is no lock-in period in the stock market or the equities market. And again, not all companies pay dividends. The companies that pay dividends consistently pay dividends every year. Some pay interim dividends. Interim dividends is the interim that is paid when a full year is not over. So for example, a company pays dividends in June of 2025, that is an interim dividend. So not all companies pay dividends, but some do pay consistently. Can you tell us more about Kingdom Securities Limited before we consider it as a broker? So Kingdom Securities Limited is a subsidiary of Cooperative Bank of Kenya. It's the brokerage arm with a good number of retail investors. So what I will say to convince you is that we have a very good and capable research team which offers expertise and information on how the market is performing, recommendations, and the reasons behind those recommendations. What I'm saying is there's a lot of information. The information gap in terms of what you should know at the market and what you know is quite narrowed at Kingdom Securities, because we offer a lot of information on how these companies are doing and also the economic landscape or where they operate. So this is information that is very necessary when you're starting your investment journey. So thank you very much. And someone is saying, Bonnie, thank you for the comment. Awesome presentation. The training was insightful. Thank you very much.
Thank you for joining us on this week's webinar. Next week, we shall revisit the topic of unit trusts. To join the conversation, send us an email at webinar@coopbank.co.ke and we'll give you the plug. Remember,